thank you for all of you joining us. My name is Naresh Raja. I lead the Data, RegTech and Digital Advisory practice here at Grant Thornton. And I'll be introducing the panelists in a couple of minutes. A couple of logistical items for all of us, actually, if that's okay, before we kick off. On the right, and we're on the right-hand side of your screen, you'll be able to view your control panels. This is fundamentally important. Would like this to be an interactive session with questions coming in, but also your views. We're going to be running a couple of polls. And I can't promise it's going to be as exciting as a Eurovision Song Contest, but I think it will be something that will be quite interesting for us to understand what's going on in the ESG data space. The webinar is being recorded, so you're able to look back at it whenever you want, and we'll distribute the webinar after the event. We do apologize, it's a live event, so a live webinar rather. So if there are interruptions, dogs, children, etc., then please do bear with us as we actually go through the session. We want to make this as interactive as possible, as I said before. So please do actually in the chat function put your questions through, any comments you have, and please do. I do urge you to actually contribute to our polls. They're really, really important because our fantastic panelists will be leveraging that as we do Q&A. So without further ado, I think we're going to make a start. I think we'll 1 minute past 3 o'clock, so we'll try to be punctual and make a start today. I'd like to introduce my fellow panelists on this panel. So Becky, why don't you perhaps start with an introduction, please?
Thanks, Naresh, and thanks for inviting me to speak. I'm really looking forward to talking to you all. So I'm Becky Palmer. I work at ICE Data Services, and I am in our sustainable finance function. So we look at both data services for directly into asset managers, wealth managers, banks, etc. But we also host a number of exchanges, which includes sustainable products.
Thank you so much, Becky. We're very excited to have you on the panel today. Nirav, would you mind introducing yourself, please?
Sure. Good afternoon, everyone, and thank you for joining us today. So my name is Nirav, and I work for M&G PLC. I head up the ESG analytics practice over there, and we predominantly work as a cross-section of investment requirements, data, and analytics to develop tools and capabilities required by investment professionals to incorporate ESG into their investment decision-making. So very excited to be here today and talk to all of you.
Perfect. And last but definitely not least, Reinhilde, please would you mind introducing yourself?
Thank you very much, and thank you so much, Naresh, for having me. I'm Reinhilde Waracher. I'm part of ISS ESG, and more specifically, I'm leading our global ESG data strategy team. What that is it's actually a unit within ISS ESG research that works with our stakeholders across the board, and of course also our clients, to deliver a robust data infrastructure and data platform. So we do all things related to ESG. Super excited to be speaking to you today and looking at what the challenges and opportunities are in this space.
Perfect. No, well, very welcome, Reinhilde, Nirav, and Becky. It's a fantastic panel, and I'm honoured to be sitting on the same panel as the three of you. One item is Sandy Kumar, who's the head of financial services at Grant Thornton and head of BRS, our business risk services. He was going to chair the event. Unfortunately, he has just come back from holiday and he's had an urgent client meeting that he's had to take. So he sends his apologies, but has hopefully left you in my care as we go through this event. So Sandy does send his apologies, but hopefully we'll be able to carry on without him. So what's the agenda for today? And it's a very jam-packed agenda, as you can see, and hopefully we'll provide everybody with a lot of content in today's session. I'm going to probably give some opening comments in terms of ESG data today. I'll then hand over to Becky, who's going to really touch on ESG, the regulatory landscape, both from a UK and European Union standpoint, and some of the differences that she's seeing in her role. We're going to then pass on to Nirav Shah from M&G, who's going to talk about a viewpoint from the asset management industry. And the asset management industry has had to be at the forefront of looking at ESG response, looking at the portfolios. I'm going to really touch on how, from a Grant Thornton standpoint, are we seeing some of the data challenges that are coming, and then the approaches, the common approaches our clients are taking with our help to solve some of those issues. And then we're going to go into the real meat of the bones in terms of today's session, which is the case study, where we've been fortunate, Nirav and I, to work together on an ESG data analytics platform, and we're going to try to bring that to life later today in that session. And then we're going to then move into a panel discussion where we're going to ask Becky, Nirav, and Reinhilde to really answer a set of questions in terms of their points of view, what they're seeing in their extensive experience in the ESG data space, and we'll move on to kind of closing comments and Q&A. As I said, please don't wait in terms of the Q&A till the very end. Please put them through the chat, and we'll try to answer them as quickly as we can. So let me start with some. Hopefully, because there are a number of you on the call today, you'll understand the space as well, and you'll be able to contribute. But let me give some context in terms of why this is important. So it goes without saying, ESG is one of the top priorities, if not the top priority, in financial services boards, shareholders, and employees, and it's in every conversation we're having at the moment with our clients. We are going to touch on really one key enabler of ESG, which is data, and without understanding data, ESG data plays a critical, fundamental role in developing the ESG framework, and that's what we're really going to talk through. Within the UK government, and in terms of the UK government itself, and the European governments have set targets for a net zero economy by 2050, as we all know, and there is a significant emphasis by a number of stakeholders in one, understanding the ESG landscape, but more importantly, doing something about some of those commitments. And what we're seeing as we speak to clients are clients themselves, organizations themselves, are making substantial commitments in terms of the ESG agenda, notwithstanding regulatory reporting, notwithstanding the net zero targets. So one component is a CEO or a board chairman actually making commitments, and how they're going to live up to those commitments is going to be an interesting aspect in the next few years. And ESG data is going to be really the engine that powers the decision making, the interpretation, and the clarity by which an organization can articulate its focus in terms of ESG data metrics and also reporting. So hopefully that provides a bit of context and introduction for today's session. What I'm going to do now is really hand you over to Becky to really talk about the ESG regulatory landscape. So Becky, over to you. Thank you.
So just to sort of give you a quick overview of the EU sustainability framework to start off with. The EU announced in the last year or so the constituent parts of what is really a comprehensive sustainability framework that will eventually address much of the EU ESG value chain. The EU had some key objectives that they intended to achieve, and you can see those at the bottom there: to direct financing to all sustainable products and projects, in the knowledge that the cost of transitioning to a net zero economy will be significant. However, inevitably, this will lead to perhaps less worthy products or projects being badged as sustainable if there is no standard created to define this term. So that's a significant challenge which exists around a lack of industry recognised definitions of terminology in this space, which either intentionally or unintentionally will result in greenwashing. So the framework aims to solve for these issues. And I've tried to sum up many of the components in this slide, but this is definitely not comprehensive in terms of what the EU is putting into place. The green taxonomy forms almost the cornerstone of the framework, as it defines what activities can be considered to be sustainable and applies to both financial and non-financial entities from the beginning of this year. The NFRD is the framework currently in place to define the requirements for the sort of beginning of the value chain, so large corporates. But proposals to expand both the scope and granularity of those disclosure requirements under the rebadged CSRD have been published, but that's unlikely to take effect until at least 2024. This means that in the interim, the mandate to make company sustainability disclosures remains only with those listed companies with more than 500 employees and with no firm guidance on format and definition. The Sustainable Finance Disclosure Regulation applies to financial market participants who are required to explain how sustainability factors are being considered in investment decision-making processes. Depending on the size of the organisation, this might apply at the product level, but also also the entity level. The first part of this regulation took effect in March last year, but we still await the Level 2 RTS to firm up more detailed reporting requirements. But the assumed effective dates for these are January next year, it's 2023, for product level reporting to start, and the first entity level principal adverse impact statements to be made by June 2023. The EBA is mandating that credit institutions and investment firms must describe their ESG strategies, governance and risk management arrangements with regard to ESG risks, as well as disclosing information on climate risks, mitigating actions, and the green asset ratio, which is the proportion of assets that are environmentally sustainable and contribute substantially to the taxonomy objectives or are enabling activities to those. Starting in June this year for some firms. The EBA disclosure proposals leverage existing frameworks, such as the TCFD, the EU Green Taxonomy, and eventually CSRD, but also the Capital Requirements Regulation and the Capital Requirements Directive. CRR requires large public entities to disclose ESG, physical and transitional risks. CRD amendments will require institutions to appropriately identify and manage their ESG risks, in particular under internal governance structures and capital needs across the short, medium and long-term horizons. Finally, to take sustainability transparency to the other end of the value chain, the Insurance Distribution Directive and MiFID II guidelines as pertains to investment preferences are being amended with effect in August this year. Investment managers and advisors, insurance intermediaries and undertakings will need to ensure that they've understood and taken into account the sustainability preferences of their client before giving investment advice or suggestions. Clearly, for this to function meaningfully though, the rest of the building blocks regarding disclosures in the value chain do need to be in place. If I could have the next slide, please. So just to take a step back to the EU Green Taxonomy for a moment, as this will form a significant part of the definition of what we consider to be sustainable going forward, you can see from this slide that there are 6 objectives listed on the left. The detailed definitions regarding contributions towards the first 2 objectives have been published already, and reporting obligations began this year. We await details on the remaining 4 later this year, and with reporting obligations planned to begin next year. However, they're also being integrated into the other 2 regulations that you see on this slide. So eventually under CSRD for listed entities and under SFDR for financial market participants. The obligations are being phased in over the next 3 years, with eligibility reporting being required this year and the full alignment reports for listed entities coming in 2023 and 2024 for financial market participants. To turn to the next slide, if that's okay, thank you. To turn to the UK more specifically, the UK government has also announced its roadmap to sustainable investing, which incorporates very similar components to those in the EU, but with only the TCFD element being implemented so far. So the later dates that you see on this slide timeline are subject to consultation and confirmation. Building on the first phase implemented last year for premium listed companies and occupational pension schemes with over 5 billion in AUM, TCFD reporting obligations took effect at the beginning of this year for asset managers with more than 50 billion in AUM, asset owners with more than 25 billion, and additional occupational pension schemes with more than 1 billion, not to mention a wider scope of listed and registered companies. We also expect to see further consultation on the technical screening criteria for the UK taxonomy and feedback on the FCA's discussion paper from last year on SDR and product labelling. And later this year, we're expecting to see the legislation land for the UK taxonomy reporting requirements. In 2023, the scope of TCFD reporting will extend again to incorporate asset managers and asset owners with over 5 million in AUM. We should see the first reports also being filed by those caught in the 2022 scope by the middle of the year. And a further consultation on the technical screening criteria for objectives 3, 4, 5, and 6 under the taxonomy. Within the next couple of years, we're expecting the recently formed ISSB body to announce their reporting standards, which the UK government has committed to incorporate into UK disclosure requirements, which will apply to economically significant companies. So what are the differences between the EU and the UK? Ostensibly, not a huge amount, as you can probably tell from a lot of the acronyms that are being used. The taxonomy is largely expected to follow broadly the same lines as in the UK as it does in the EU. The SDR has a very similar theme and feel to SFDR. However, the one difference is, I think, that the UK is rolling out more slowly and more considered than the EU, and trying to stagger the timelines to provide the data required to the necessary components in the value chain. I think we're going to talk about that in a little bit more as we go through. So that's just a quick overview of the regulations. Back to you, Naresh.
Thank you, Becky. That was fantastic and really brought to life some of the regulations and some of the key implications. And I thought it was very clearly articulated. So thank you for that. Could we, as we move on, I'd like to bring up the first poll question, please, if that's okay, in terms of what we're looking at. And really this kind of segues into the next part of the agenda, which is, now you've heard about the regulatory requirements and commitments that have to be undertaken, both in terms of the UK and the EU, and obviously there's going to be a nexus for some of you firms who are basically going to be having European operations and are UK headquartered and vice versa. But where are you in your ESG data journey to meet those requirements? And we're looking at a number of parts of that. So you haven't started yet, but are starting to think about it. You've developed a strategy for data, ESG data, and ESG data is a critical component. You've started this ESG data project, and you're actually acquiring market data and on the way, and then you're building an integrated ESG data analytics platform, or you don't know. So please do bring those questions or do answer those questions. And whilst we have those questions coming in, I'm going to ask Reinhilde if that's okay. Reinhilde, what are you seeing in terms of your clients and your interfaces in terms of those questions that I've just asked?
Yeah, thank you very much for that question, and actually very interesting poll question. I'm very curious to see those results here. So what do we see? ISS ESG is working with clients globally, and of course one of our key roles is actually to support institutional investors in navigating through this difficult landscape, but also just simply providing the data that is necessary to implement strategies. But it's really a mixed picture, and I think that just needs to be stated, right? I don't think we see many strong characteristics outside of Europe. Of course, in Europe we have such a fundamental drive through the regulatory initiatives, and that is coming into play in other markets as well, but never to the same extent. So I think it's really a mixed picture on where the industry is today. Many institutions have really acquired phenomenal expertise in-house, and others are still at the starting point and are just engaging in that journey. So here we have the results. Perfect.
Well, Reinhilde, thank you first for your kind of viewpoint and what you're seeing. Thank you so much. And then this is the results from the jury, shall we say. So thank you all of you who've contributed to that, and it's actually quite interesting reading. So 30% of you haven't started yet, but are starting to think about it. And that's obviously right, given the timelines that Becky articulated. 23% of you have developed a strategy for ESG and data as a critical component, and that's good. And 19% of you you've started an ESG data project, and you're acquiring market data, which is obviously fantastic. And then the 8% is you're actually going to build or building and ESG data analytics platform, which obviously will bring all that together. And then finally, the 21% don't know. So I suppose that component probably is worrying, which is your organization hasn't articulated to all of you what it is intending to do in the ESG data space. But helpful. Thank you everybody for commentating, for coming back on that. I'm going to pass you on to Nirav Shah. Nirav, from an asset management industry, could you give us a bit of viewpoint of what's happening in your industry in terms of ESG data, please? Thank you.
Sure. Yeah, once again, good afternoon, everyone, for those of you who just joined. So can I have the next slide, please, Emma? Okay, I just wanted to quickly recap what do we mean by ESG data before we go into some of the challenges that we're seeing from within an investment organization like ourselves. So as Becky pointed out, we are at the onset of a fundamental change in which in the way we judge investments. There are strong regulatory requirements coming up in terms of disclosing how sustainable our investments are. And besides that, a reputational risk and the need to disclose, we also see this as a big competitive advantage that can help us grow and get more business. So the ability to integrate ESG data into our investment decision making is really important for us within an investment organization. So with that background, what does ESG data mean from that perspective? How do you articulate the impact of ESG on investments? So this slide shows you some sample data points that we consider in order to articulate the impact of ESG on our investments. So it's data points like when you are evaluating an issuer or for potential investment, what are their emissions? How are they managing waste? What is their energy consumption in the environmental impact category? On the social impact category, we evaluate them on things like their diversity and inclusion policies, their human rights policies, and employee welfare policies. And then finally, the third aspect of this that we evaluate potential investees on is how does their governance structure look? What does their executive remuneration look like? What is accountability and oversight mechanism within their board? And what describes their ethical conduct? So all of this varied data comes to us through several different data sources, and that is what is the key challenge in integrating ESG into investments. So as you see in the middle column of this slide, we get this data from various different sources, be it unstructured data, be it structured data, from our external partners like MSCI, ISS, Bloomberg, or directly even from publicly available disclosures through Twitter and company annual earnings and things like that. And getting all that data together and overlaying on top of our positions and investments is the key challenge that we're facing as from within the investment organization. So if I can have the next slide, Emma, perfect. So this then presents the view from within the investment organization and what are the challenges here. So on the top, you see where the data is needed. So it ranges right from researching potential issuers to making policies on what we would invest in, to ongoing maintenance and oversight of our portfolios and investments, and to the far right, then to queries that our clients ask us, and finally, of course, regulatory and external disclosures. So the ask for ESG data within an investment organization is all across and all encompassing. Various different teams within our organizations need this data to be able to do their function. In order to bring this data, there are several complexities that we've highlighted at the bottom. So the key complexity, of course, here is that this is a really evolving and rapidly changing field. So the coverage and the amount of disclosure available is really sparse. Not a lot of investees and issuers are still yet disclosing what their true ESG credentials are. This then leads us to develop mechanisms by which we source this data, like we saw on the previous slide, from various different sources, from various different vendors, and then overlaying all of that data on top of each other and making sense of it further exacerbates this problem. Since this is such an evolving field, the the complexity of ESG data is kind of further made worse by the lack of foundational capabilities. A lot of organizations are still developing the capabilities needed to be able to incorporate ESG into their investment decision making. So there is complete need for data quality and governance mechanism to define golden source of truth. Where does a certain data point come from, to be able to do exceptions on top of that, and then finally overlay all of those factors on top of the position data. So that is the key problem statement over here that we hopefully will cover in the next slide, to how we've had a approach to solve it within M&G.
Perfect. Thank you, Nirav, for bringing that to life. That was really, really helpful. So I'm just going to pick up the baton from Nirav. He's talked about some of the challenges that he's seeing from an asset manager perspective. And we've been working as Grant Thornton with a number of clients in terms of ESG data challenges, and then what are the opportunities that they present. And in our view, there are really 5 components in terms of challenges, which, if undertaken correctly, can be turned into opportunities. The first is, I think we've touched on that before, is ESG data vendor assessment and selection. Each of the data, market data vendors have a different point of view in terms of their ESG ratings and their ESG scores and the ESG definitions. And the key component of any organization who's looking to broach space is to be able to really decide on the right ESG data strategy, to be able to bring in the right levels of data from market vendors internally and be able to integrate that effectively to create an end-to-end position on ESG data. That presents an opportunity in terms of developing the right data sources, the right data pipelines, and undertaking due diligence to link ESG data into broader data sources and create the appropriate vendor selection, identification, and execution. The second biggest challenge we're seeing is effectively organizations having to create an ESG data strategy, data management, and data quality. And those 3 components are connected, which are organizations are struggling to be able to articulate how they're looking at ESG data, the different fragmentation of those ESG data components, both in terms of unstructured and structured data, which Nirav spoke about, but also the variety of internal and external data sources, and to be able to articulate how the ESG data strategy interchanges and interfaces with the overarching data strategy and how that can be pulled together. So that's kind of one in terms of having a really clear ESG data strategy. The second is really around effective data management of that, and how do you look at critical data elements and components and working at the full data management lifecycle, and then the quality of that data, both externally and internally, and remediating that quality. The third challenge is ESG data analytics. Really is able to map those internal and external data, create data pipelines, data models, to then effectively have an end-to-end analytics platform which articulates ESG data, both in terms of internal stakeholders, regulators, and shareholders. And we're going to touch on that case study in just a couple of minutes. ESG metrics and reporting, we've heard Becky articulate that really clearly. How do you create regulatory reporting and metrics linked back to effective data and have that traceability working? And then finally, ESG data, if it's undertaken correctly, is a clear value opportunity and a competitive advantage. So how does these firms that can actually integrate that data have all of those components in place, 1, 2, 3, and 4, the vendor selection, data strategy, analytics, and metrics and reporting? That is a really clear ability to have competitive advantage and commercialize that data. And we're seeing some of our clients actually go down that route. So now we've looked at the data challenges and opportunities, if we move to how are we helping our clients actually solve some of those issues? And I'll just touch today on a few of those. The first is really we're helping some of our clients develop an effective ESG data strategy, including selecting the data sources and market data, etc. The second is we're helping our clients develop an ESG data taxonomy or a book of record, an ESG book of record. And Nirav and I will touch on that more broadly in terms of our case study. The third is actually we're helping our clients with building an ESG data analytics platform. And again, that's the case study we're going to talk about in building an effective ESG data analytics platform. We're helping some of our clients with data assurance, and that is to actually provide external perspectives and assurance on what are the right type of internal and external data sources, what's the ESG data strategy, data pipelines, data quality, etc. And then finally, we're actually providing some expertise to organizations in terms of ESG overall. If we move on then in terms of the next viewpoint, you'll please do feel free to contact me in terms of some of the things that we're doing with our clients and some of the capabilities we've developed in this ESG data space. But we're going to move to a second poll question now. So if we can bring the kind of poll question up, if that's okay. And so you've heard Becky, Runhilde, myself, and Nirav talked about a variety of capabilities that are in place. And those capabilities are essential to deliver an effective ESG data landscape and then contribute to ESG reporting. So the question itself is, which of these key capabilities do you currently have in place? A dedicated ESG data team, you've developed an ESG data strategy, you've developed an ESG data taxonomy or a book of record, or you've built an ESG data analytics platform. And from the previous question, it seems like some of you have actually built that. And then all of the above, all of that's in place and it's operating as it should do. So whilst we're waiting for that poll question to be coming in, and please do provide us with your responses. Becky, if I can maybe turn to you and ask from your experience, what are you seeing in the market in terms of the variety of capabilities that we see from our clients, that one, that we're either supporting them in, but or secondly, that they're seeing there's a need and they're investing in?
Yes, I mean, we're definitely seeing quite a spectrum of these sorts of areas. So for example, we'll speak to often the larger organizations who will have a dedicated ESG team or specialists who are forming the strategy or have already formed the strategy and are just augmenting it. They have it. Sometimes they develop their own taxonomy, but sometimes that might be driven by the source or sources that they're taking. And again, it's probably the larger organizations that we're seeing who've actually got their own platform to bring this in. Then when you go to the sort of smaller end of the spectrum, we don't always see that so much. You might have an ESG specialist in the singular who is trying to put together the sort of strategy and form the way forward. And they're often very, very knowledgeable individuals, but clearly, we'll have a resource challenge around how they achieve that strategy.
Perfect. Thank you, Becky, for that. And so this is quite interesting reading. Thank you, everybody who's actually articulated that. So which of the key capabilities do you have in place? So we're seeing a dedicated ESG data specialist team, which is great. 30% of you, you've developed an ESG data strategy, 37%. You're developing ESG data taxonomy. That's interesting. Only 6% of you have a defined ESG data taxonomy, and then 13% luckily correlates with before, building an ESG data analytics platform. And then 15% of you have all of the above, which is really good to see, and are progressing in the right way. So that's great to see. Thank you for bringing that to bear. We're going to probably go on to, we're having some technical issues actually with Nirav. So it really depends on if Nirav is able to hear us and see us, or whether we're going to go to the the panel conversation and then come back to the case study. So just a bit of kind of background. So Nirav and I have been working together on a real project, which is building the ESG data platform. And that's kind of what we were going to demonstrate now. Nirav, can you hear us actually, or are you online? I know you were having a bit of difficulties with your internet. Okay, what we're going to do is we're going to move to. I'd really love Nirav to articulate it, in terms of what the benefits were and the outcomes, much better than myself doing that. I'm going to turn us to the case. The kind of the question and answer session now in terms of a panel discussion, and then we'll see if we can get Nirav back in terms of that. So if we can move into the panel discussion, if that's okay, and if I can ask everybody to put their videos back on and so on, and let's hope Nirav makes an appearance, or back makes an appearance in terms of our viewpoint. So there we go. I did warn everybody we would have real life technical issues, and I think we seem to have one at the moment. And so hopefully we'll have Nirav back soon. But whilst we're waiting for Nirav, we're going to move to the panel discussion, so we'll just switch things around. I'm going to probably ask the question first in terms of Becky and Runhilde on your perspective on regulatory reporting obligations and how ESG data can really support that. So maybe Runhilde, you'd like to start first in terms of your point of view, and then we'll move to Becky.
Yeah, thank you very much, Neeraj. And Becky, you alluded to it already in your presentation, and you really the very structured run through of the various initiatives that are mutually supportive. One of the big challenges really is actually the getting hold of the detailed granular ESG data and raw ESG data, right? That is underpinning and will underpin those initiatives. So just to give you a little bit of a sense of where we are today, I mean, of course, we all have been, there's a ton of ESG data out there. It's really, that really needs to be emphasized as well. We have really access to huge volumes of ESG relevant data, both from corporate disclosures and alternative data sources today. However, the very specific requirements that are set out in those regulatory initiatives require additional corporate level disclosures that are just getting started actually. So we are currently looking at corporate disclosures on taxonomy eligible activities. And what we see coming in is, on one hand, of course, encouraging. We see first disclosures being made by companies, but at the same time, they're not at the granular level that we, and I'm sure all of you would like to see. So I think it's going to be a long journey, and that is probably feeding into some of the other issues that we want to discuss, right? How do you build a platform that sort of makes room for that continued growth and continued change?
Thank you, Runhilde. Thank you for that. Becky, would you like to add to that? And actually, we don't really mind a bit of disagreement on the panel, so please do feel free to disagree with each other. It makes things a lot more interesting. So please, over to you.
Well, it might be fun, but actually, I completely agree with Runhilde in this instance. That's exactly what we're seeing as well. Is there's a whole plethora of data points out there being disclosed by companies. Not necessarily on the data points that the regulators are asking for, and even where they're vaguely related, not in the format that the regulators asked for. So, it's either on the user or indeed us vendors sort of sitting in the middle to kind of do some derivation and normalization to get those data points to be fit for purpose in terms of the regulatory reporting. But I think the key point that I think we both sort of kind of touched on through the reg updates is that the timing of the introduction has meant that the corporates are not mandated to produce reports in a format that aligns with what is being required for financial market participants, and so that gap is going to persist. I would say for probably at least a year or two until the pressure increases sufficiently on corporates to expand what they're covering. I mean, the other thing as well that I would say is not just about data availability, but actually data definition. And so whilst SFDR, for example, did make some attempt to define the indicators, so bring a little bit more sort of standardization into being, the indicators themselves are listed, but the definitions around exactly what those indicators mean or are is still pretty fuzzy. And so there's a lot of interpretation on both vendors and probably disclosing companies and people who are trying to comply. It's just going to, I think, again, it's just going to be a gradual learning process for everyone until we all arrive at coalesce around a single point.
Perfect. Well, thank you both. And although I would have liked some,
may I add a point to that, Neeraj?
course you can. Of course you can. Please go ahead.
Just to follow up on what you just said, and I'm agreeing. I'm not disagreeing at all, unfortunately. But I think what that really all brings us to is building agile data infrastructures, right? I think that, and that is just to emphasize as well, you're right. That's also on our end as a data vendor, as a vendor of data and research solutions. We need to build a very agile data infrastructure to allow for this constant enhancements, improvement, changes, and really look at the highest level of transparency, integrity when it comes to source references, going down to raw data wherever we can. So I think that's really fundamental in the industry today. We need to build very, very agile data infrastructure.
Perfect. Okay, thank you, Ronaldo, for adding to that. There's a question that's come through: is what are the panel's thoughts on PRI? So, Becky, do you want to maybe start with that?
Sure. I'm wondering what angle this is coming from. I mean, clearly it makes a lot of sense for there to be, you know, for financial organizations to get together to kind of make sort of commitments towards best practice in this space. I mean, that makes complete sense, and you know, we're looking at companies who've done that, and it's and I think that's going to be very valuable for people consuming that information to also see. I think that there's a lot of these, what do I want to call it, bodies, commitments out there. They're all really valuable. I think eventually what's going to be the most valuable thing is when there's kind of alignment around the sorts of things that they're committing to. I think there broadly is. There's enough sort of high level guidelines and principles out there that kind of form the fundamentals of what we're seeing now. But you know, I think it's a good thing. There's just so many of them as well, with slightly differing aims.
Sure. Reinhilde, do you want to add to that, or in terms of?
Yeah, I mean, the PRI has played an absolutely critical role for sustainable finance, for the ESG space, right? So since its inception, the PRI has been really a driving force. And I think in this context, in the context of what we have been focusing on so much now in terms of regulatory developments, you know, we have regional and country-specific requirements. The PRI is really that global player. So I think where the PRI comes in and helps and support is being that platform for exchanging perspectives, lessons learned, and lift it to a global level. And I think that's very valuable.
Brilliant. Thank you both. So we're going to move on to another question, actually, is what do you think are the critical ESG data challenges, and what can be done to overcome them? So I think I articulated a few of those in terms of from what we're seeing with clients and what we're working through, and so did Nirav from his viewpoint. By the way, you can also disagree with me in terms of the data challenges and opportunities. But what do you see? And I think, Becky, I don't know whether you would like to start in terms of what do you think are the critical ESG data challenges, and what can be done to overcome them?
So, I mean, risk of repetition. I think some of them are kind of the things that we're seeing and that I think the regulations are actually seeking to solve for. So clearly there's going to be times, there's going to be iteration that we see before these things really do get fixed. But, you know, I think, you know, some of the big issues we see are, you know, lack of definition of the data, commonly understood terminology, even for particular indicators. I mean, for example, GHG emissions. You know, under the Kyoto Protocol, GHG emissions cover 6 gases. How many companies' GHG emissions actually cover 6 gases? And how many are covering maybe carbon, maybe some of them all gases, some of them are breaking them out, some of them just don't have them. The transparency into that, so that are you really comparing like for like, if you look at someone's, let's say scope 1, you know, it's really not necessarily there. And you know, then scope 2, we've now got the split between market and location based data, and some companies do that, and some companies do one of those two, and some companies just munge their number together again. And so again, how do you compare these things when the real granular differences behind the data are just so difficult to really understand?
Totally right. Becky, and I think just one comment I'd add to that is if you look at, and that's why I think the ESG data taxonomy or a book of record is fundamental to organization, is to be able to defragment or to create a taxonomy and try to break down this kind of monolith when people talk about E, S, and G into its subcomponents, and then really create metrics and data elements and traceability all the way through. And that's kind of fundamental to this. Reinhilde, what are your thoughts in terms of the biggest ESG data challenges and how to overcome them?
I think the biggest challenge and opportunity is transparency, and it really leads back to everything that we just discussed. And maybe I also wanted to link it back to what Nirav mentioned in his presentation, the challenge of coverage, right? Finding data for a broad enough universe, finding comparable data for a broad enough universe. And I think that is, again, brings us back to that question of transparency, because the reality is if we go down to sub-metric level and really at the granular level that you just exemplified here, Becky, that is really critical. In order to have comparable data, you really need to know what has been counted, what has been accounted for, what has been measured, for what time period, for the full organization, part of the organization. So there's so many nuances in all of this. And I think we're working slowly, sort of coverage and availability of comparable data will increase gradually for certain areas as they mature, as they go through regulatory requirements, whereas others are just emerging new issues, and we will see a high degree of variance. So it comes again back to the very core of what we are discussing here. How do you build a platform and infrastructure processes around all of this that allow you to take in the nuance and be fully aware of the differences, but without having that as a blocker. So you will have to model, and we all do model. Either you do that through a vendor like ISS, or you do it in-house. But we need to know when we can replace that with raw data and new data.
Perfect. I'm going to allow the plug for ISS there for Reinhilde. I'll allow that plug that you just made for your organization. So that's absolutely fine. So really coming back to really kind of last. Oh, we have another question that's come through. Your speaker has emphasized the importance of organization disclosures or lack of. How can we overcome this transparency concern? So that's the question that's come through. So whilst we're thinking about that, I think in terms of that question, I'm going to ask both of you to probably give you kind of closing summary points from this panel conversation in terms of what's your key piece of advice for firms embarking on this complex ESG data journey. So Reinhilde, why don't you go first in terms of what's your key piece of advice for firms? We saw maybe 17% of firms are starting on this journey. They haven't really reported for maybe that part of the spectrum. What would be your key advice?
So my key advice would really, for those that haven't started on this journey yet, to take a focused approach and start in a confined and narrow area. In order to build a foundation that is robust and can then expand. And again, that brings us back to those other aspects that we discussed, sort of an agile structure, flexible structure. But I think as you also mentioned, Neeraj, and it is exemplified in your book of records here, this is a very vast space. It encompasses so many different areas. You have to take a very conscious, focused approach to get started, to be well placed to build on that. So you have to just build that strong foundation. You can't do it across the board.
Thank you, Reinhilde. And Becky, over to you on that same question, please.
I think I'm actually about to agree with Reinhilde again, because I think what I would say my starting point would really be to say, understand your motivations. And this is, I guess, to Reinhilde's final point there. We see ESG interest across maybe 4 broad perspectives. So number one, increasingly we're seeing this data being used in risk management scenarios. Number 2, there's obviously the regulatory reporting requirement that we've just talked about quite a lot. Number 3, there's investors who just want to do the right thing. They want to make sure they're making sustainable choices and kind of good investment choices. But I think there has traditionally been a bit of a viewpoint that may be a trade-off between, you know, doing the right thing and maybe some sort of revenue. And actually, I think there's a growing school of thought that that isn't necessarily the case. And so investing in the right thing doesn't necessarily have to be at the expense of revenue. And actually, if you pick what may be considered to be material data points that are shown to have a correlation with maybe better company performance, then actually maybe that's not necessarily the case. There's a lot of people looking for alpha now through ESG components. So I think to Reinhilde's point there, what I'm saying is pick your battles and focus on what's important to you, what's your strategy, and look for the material data points that rely on that. You know, looking at the data through that particular lens rather than boiling the ocean with all the different data points that there are out there at the moment.
Perfect. Well, thank you both for that. And you know, apologies from Nirav. We've not been able to contact him. He's had an internet failure. I hope it's nothing serious, and there wasn't a cyber attack or something like that. Let's just hope. But what we're going to do is we're just going to run through in terms of the case study, and this was going to be a joint conversation or joint articulation by Nirav and myself in terms of this case study. And there's a link, and Emma will put that link in the chat for anybody who wants to read the further details in terms of the ESG data platform that we've built working with Nirav's team. But if we move on to the next component, let me just articulate, and I think Nirav will do a better justice than I do, but I'll do my best in terms of that. So the key things in terms of a ESG data analytics platform that has been built, and you know, we have a demo which we'll kind of articulate in a minute, is really the first component. It is something we've articulated in terms of the book of records. And this is about being able to create a house position on ESG across 38 odd subcomponents of ESG and overlay data from various data providers and some internal data, especially around governance, to be able to point and articulate your house position on ESG, especially when all of the rating providers, MSCI, Sustainalytics, ICE, etc., have different viewpoints on every single component. The second is exception management, because you will have exceptions in terms of those data elements, and data quality checks. There will be poor data quality, both internally, but also increasingly in terms of the different components that are coming in, which when you link it up to your systems and your data pipelines, you'll have data quality checks that needs to happen. The third element is the rule sets and the house view in terms of critical ESG and sustainability policies. And this rule set and your house view is really based on you articulating to your shareholders, the wider public, and stakeholders what your individual positions are in terms of climate, in terms of carbon emissions, in terms of diversity, in terms of inclusions, your own articulation of metrics, and how they interface with published metrics that the various rating providers provide. And that rule set is really important. Factor analysis is important in terms of how do you actually put in and overlay the ESG factors over investments, and this is obviously very key for some of the work that we did with Nirav's team in terms of each of the investments and positional data. You need to have ESG factors overlaying the market data, and then the insights that everybody needs to have in terms of both the front desk, in terms of an asset manager, and then it'd be how they're able to articulate those different components. And then very, very importantly, the reporting and disclosures. How do the 5 points above link back to those reporting disclosures that are there? And if you look at the right-hand side, you know, Nirav touched on some of the things on the right-hand side before, which is research, compliance, reporting, disclosures, policy analytics, and surveillance and queries. These are the use cases in terms of investment organization. And then the platform is built in an architecture, and you can see the architecture in the case study that Emma hopefully has posted to you all on the chat, which is around the house rules itself being developed, analytics and reporting, screening, especially in terms of exceptions, management, workflow, the book of record, and then how the actual internal research and analytics teams undertake that. That then is plugged into the data vendors and external providers. So we're just going to run a short video in terms of just the look and feel in terms of really the ESG IQ part of really the kind of data analytics platform. And Nirav would have talked through this. Again, if you have any questions in terms of how we helped build this ESG data analytics platform and what the different components are, please do get in touch with me and we can talk that through. But effectively, each part of those components we've talked about in terms of bringing the portfolio together, linking together with all of the market providers, creating customized rule sets for each of those ESG linked to the ESG book of record, linked back to the ESG data strategy was formulated. And then really in terms of each of these items, each of those funds, each of those investments under management, overlaying the factors, overlaying the ratings, so that there's real clarity in terms of both the what the actual rating providers were providing in terms of their scores, but also what the organization, the fund manager, was providing in terms of its interpretation and the rule sets and the house position it was taking based on both internal data and external data, and what then that analysis was articulating for the front desk in terms of the in terms of the investment front desk, but also be able to articulate that to investors, both institutional investors and also those who are personal investors, and articulate that. So again, so we've done that, on that view, we've kind of really executed that project. You can read more about it, but the video was really to bring that to life, to articulate that in a bit more detail. So we'll let that run through, and whilst we're doing that, I think if there are any other questions that you as an audience have, please do put that in the chat, and we can look to answer that. And then what we're going to do now with a couple of minutes remaining is to give you a little bit of time. Emma, we're probably going to go to the end part of the session, if we may, just to give people the next steps in terms of what they need to do. I hope you've enjoyed that in terms of a really packed agenda. We've tried to put a lot in, but I'd like to thank my panelists, really Becky, Ranhilda and Nirav, and apologies for Nirav having to have those technical issues. My thanks to Emma and the team as always for really bringing this all together. We have a huge range of expertise in this space, so please do contact me if you want to hear more. A couple of other things before I let you go is our UK regulatory handbook, which has the 2022 viewpoint on regulations, UK regulations. You can access that over there. And then if we move over to the next slide, it just talks about some of the other events that we have upcoming. Again, Emma and the team can provide further details, or please email fsgevents@uk.gt.com for further viewpoints. But look, I really wanted to close on a couple of perspectives. First of all, obviously, my thanks to everybody who's really contributed to a fantastic discussion. Secondly, thank you to everybody who attended in terms of the poll answers and your questions. It makes everything much more real if we have participation. ESG is a fundamentally important area, as we all know, but ESG data is a minefield. And our ability to actually navigate that minefield, it really based on having a really clear ESG data strategy aligned back to the reporting obligations, the commitments that the organization has made. The second component is really having a clear ESG data taxonomy and ESG book of record, and really spending the time and effort to create that. The third then is actually your ability to visualize and bring together various data set to be able to integrate, interrogate and evaluate and provide visibility, which is through an ESG data analytics and platform. And the last component is have a really well-formed team who could actually provide expertise in all those areas. So I hope that has been helpful and you've enjoyed the event. As ever, if you have any questions, please don't hesitate to contact me. But I'd like to thank you all for coming to today's event, and goodbye. Thank you, everybody.